Hey everyone, welcome back to Corporate Decoder, the place where we unlock the secrets hidden within corporate filings. And today we have a doozy from TeraWulf Incorporated, a company that is in the business of digital gold mining or maybe digital supercomputing, depending on how you look at it. This is a current report filed on the 23rd of October 2025, and it is all about a big money move. They just made a massive notes offering that is basically them borrowing a ton of cash to fuel their growth. So what is the big deal here? Well, TeraWulf subsidiary Wolf Compute LLC just closed a private offering of notes, meaning they sold debt to investors to raise money. The amount they raised was a whopping $3.2 billion. That is a lot of zeros, folks. This money is earmarked for a very specific purpose, expanding their data center in Barker, New York. The Lake Mariner campus is getting a major upgrade, and this funding is the rocket fuel for that expansion. Now let's talk about the nitty-gritty of this debt. The notes are senior secured, which means in case of trouble, these note holders get paid back before other creditors. They come with an interest rate of 7.75% per year, and this interest is paid out twice a year, every the 15th of April and the 15th of October. The notes are set to mature on the 15th of October 2030, unless they're paid back sooner. This isn't just a simple loan though. There is a structure to how the principal gets paid down too. The principal amount of the notes will amortize, meaning it will be paid back in portions on those same the 15th of April and the 15th of October dates each year. However, there is a kicker. If the money comes from expanding their data center buildings, no principal repayment from that specific expansion will be due until those buildings are actually finished. And like most big debt deals, there are conditions around paying it back early. TeraWulf can choose to redeem these notes early starting the 15th of October 2027. They can pay back all of it or just a part of it at specific prices outlined in a document called the indenture. Before that 2027 date though, they have a bit more flexibility. They can redeem the notes early, but they'll have to pay a bit of a premium called a make-whole premium on top of the principal and any unpaid interest. And here is an interesting detail: they can also redeem up to 40% of the total note amount using money from certain stock offerings if they need to. Now, when you borrow this much money, you usually agree to certain rules or covenants. The indenture puts limits on what Wolf Compute and its guarantors can do. For instance, they can't easily take on more debt or issue certain types of stock. They also have restrictions on paying dividends, making investments, selling assets, or even merging with other companies. These are pretty standard restrictions for a large debt offering designed to protect the lenders, but there is also a crucial clause. If a change of control happens, a big event where the company's ownership changes significantly, TeraWulf has to offer to buy back these notes at a premium of 101% of their face value, plus any accrued interest, of course. There are also provisions for what happens if things go really wrong, like custom events of default. Something else that is quite important here is this completion guarantee from TeraWulf itself. This means that if the money raised from the notes and any other available funds aren't enough to finish the New York data center expansion, the parent company TeraWulf steps in and promises to provide the necessary funds to make sure the project gets completed. This shows a strong commitment from the top to seeing this expand. Shun through. This part of the report basically just confirms that this whole debt deal creates a direct financial obligation for TeraWulf, and it is important information for investors keeping tabs on the company's financial health. And as with most of these filings, there is a standard disclaimer about forward-looking statements. They're basically saying, hey, we're talking about future plans and expectations, but things could change. Actual results might be different from what we're predicting because of market conditions or other factors. They're also reminding everyone to check their other SEC filings for a more detailed look at the risks involved. Finally, they list the exhibits that back up this report. These include the actual indenture document and the form of the note itself, which are the legal blueprints for this entire debt deal. The cover page interactive data file is also listed. This is essentially an electronic representation of the filing that computers can easily read. Now let's try to understand what this all means for TeraWulf. If you are not familiar, Wolf is a player in the cryptocurrency mining space, but they're also positioning themselves as a provider of computing power for artificial intelligence and other demanding applications. This massive debt raise indicates a confident push into significant growth. They are essentially betting big on their expansion plans and the demand for their services on the plus side, raising $3.2 billion suggests strong investor confidence in TeraWulf's future prospects. The secured nature of the notes means they obtained this financing at a potentially favorable rate given the current economic climate, and the fact that the lenders have collateral makes them more comfortable. The focus on data center expansion is strategic, given the ever-increasing demand for computing power, not just for crypto, but increasingly for AI and high Performance computing, however, there are always risks associated with such large debt financings. The interest payments alone will be a significant ongoing expense. They are committed to paying 7.75% on $3.2 billion, which is a substantial amount. They are also exposed to market volatility in the cryptocurrency space, if that is a major driver of their profitability. Furthermore, if the data center expansion doesn't generate the expected returns, or if demand for their services falters, they could find themselves in a tight spot repaying this debt, in my opinion. This move is a bold play. They are clearly aiming for a much larger scale of operations, but it is a high stakes gamble. The success of this expansion and the company's ability to service this debt will heavily depend on market conditions, technological advancements, and their operational efficiency. They are building for the future, and that future requires significant capital and execution. So that is our deep dive into TeraWulf's recent financing. What do you think about this massive debt offering? Does it signal smart growth or a risky bet? Let me know your thoughts in the comments section below. If you found this breakdown valuable, please hit that like button and subscribe for more corporate insights. And don't forget to join our Discord community linked in the description for more discussions on these filings. Thanks for watching, and we'll see you in the next one.